Well, first, I want to get your reaction to Jim Cramer's comments. Some of this trade war and some of the volatility in the markets and the policy, the exemptions, it's kind of hard to know exactly what's coming up next. Does that change the way that you're valuing stocks and the way that you look at stocks?
Well, Frank, I mean, I think that uncertainty is really key for investors right now. Not exactly knowing what the policy is going to be tomorrow, how long the tariffs are going to be kept on for, which additional countries are going to be subject to tariffs. That is creating a very tough and volatile environment for investors. What we're trying to think about is how resilient is the US economy to some of the potential headwinds that are coming from some of the policies from the administration. And then from that perspective, we are quite confident, at least that the US economy can withstand some of those pressures. We really take a lot of reassurance from the strength of consumer, household balance sheets, corporate balance sheets. So from that perspective, it does suggest that earnings growth will continue to perform well through 2025, probably not as strong as we saw in 2024. But as long as earnings growth is positive and solid, we should see continued gains in the S&P 500. It is going to be a very rocky ride, though, and that is going to be increasingly clear. So it does start to become more and more important for investors not to just look at the index level, but think about what are the kind of sectors, what are the kind of companies that they want to be invested in.
So with this level of volatility, let's just use the Dow for an example. I'm looking right here. On Thursday, the Dow fell almost 200 points. Then last Friday, it gained 600 points. Then on Monday, it fell 650 points. I mean, we can just go on and go on. I think people are pretty aware of a lot of these up and down moves. When you see these kind of up and down moves, is it hard to figure out where a buying point is? Is it hard to figure out where you might want to take profits because you think there might be more volatility? I mean, as someone who's really looking at the markets and looking for places to invest or maybe even take profit, how do you gauge all this?
Right. And it is, typically it's a very difficult thing to do to perfectly time the market. You're going to be windswept many times over in any kind of opportunity. So actually, from our perspective, because we still have that constructive outlook for broad US equities, we're still saying that, look, this is still the time to have exposure. You want to be careful, right? You want to be looking at companies that still have that pricing power, that maybe have less exposure to some of the countries that are sitting right in the line of fire. That is going to be key. But certainly, you don't be trying to time the market because it is very, very difficult to get that correct.
So I want to ask you, we're looking at some of your notes about the markets right now. You're saying the Fed's likely to begin a prolonged pause until they have greater clarity. We got the Beige Book yesterday. It showed a lot of signs of tariff-related inflation across the board. How do you think that influences the Fed? And at the same time, we have a big jobs report coming up tomorrow. How do you see that jobs report influencing the Fed? Is there a possibility that a cut, if we see a weak jobs report, could it come sooner than maybe you even expect today?
Yeah, certainly there are a number of people saying that actually the prospects of a March rate cut have increased, of course, in the last few days because of concerns around the economy. And then, as you said, the Beige Book and a number of other indicators are suggesting that actually inflation expectations are increasing and companies are starting to think about price increases. That is a really, really difficult spot to be in for the Fed. And it makes it even more likely that they almost sit there kind of almost paralyzed, waiting for some kind of clarity, not only from a policy perspective, but also how is the economy respond to that. That is not very clear right now. The data, just like the market, is quite choppy. So that to us adds probably more reason for them to sit in that prolonged pause. And then from June, once they have a little bit more information, to then respond. We do think actually that they're more likely to look through the inflation increases. So it's still on a bias to rate cuts, but it is definitely a very challenging environment for investors, but also the Fed.